So you want to learn how to draw support and resistance zones like a pro? Great. Because in this video, I'm going to show you how to draw them the right way, and you should stick around till the very end, because I've got 2 bonus tips that'll drastically improve your accuracy when drawing zones and trend lines. Tips that most traders, both beginners and veterans, totally ignore and regret later. Segment 1. What is support and resistance? Let's keep this simple. Support is a price level where the market tends to stop falling and possibly bounce up. Resistance is where price tends to stop rising and possibly bounce back down. Think of them as the floor and ceiling of a price range. But here's where most beginners mess up. They draw these levels like exact lines. In reality, support and resistance are zones, not laser-precise levels. Use thick horizontal areas, not 1-pixel lines, to mark key zones. Price may overshoot or undershoot a little, but the reaction still matters. Important rule here. To validate a zone, you ideally want 3 strong touches or reactions. 2 touches can work, but only if those swings caused major reactions like strong reversals. This helps filter out random noise and makes your zones reliable. Segment 2. Trend lines. 2 ways to draw them. All right, trend lines. There are 2 valid ways to draw them. Join the wicks of swing highs, lows. Join the closing prices, candle bodies. And yes, sometimes the best trend lines connect a mix of both. There's no universal rule, just consistency. Super important rule. To validate a trend line, make sure it has at least 3 touches. With just 2 points, you could literally connect anything. But 3 or more means price is actually respecting that line. And here comes my bonus tip. Never draw your trend line with just a single line. Instead, go to this Drawing Tools area on TradingView and select this Parallel Channel tool to create a trend line zone in a different angle. This works because price doesn't always respect a single angled line perfectly, but it does respect zones around that trend. So your upper boundary becomes the resistance trend line zone, and the lower boundary becomes the support trend line zone. It's like turning your fragile pencil line into a fortified hallway, much more durable. Segment 3. Where to draw support and resistance zones. This part's easy, and also not. Look for major swing highs and swing lows, the places where price made a sharp move or reverse direction. These are your key levels. Zoom out a little. Make sure you're marking levels that price has reacted to multiple times in the past. If it worked once, that's interesting. If it worked 3 times, now that's a zone you want to keep an eye on. Also, mark zones that led to strong breakouts or fakeouts. These often become important in the future too. Segment 4. Bonus. Tip number 2. The 4H swing level. For my day traders out there, before you enter any trade on the lower time frames like 5-minute or 15-minute, go to the 4-hour chart and mark the critical swing highs and lows. Why? Because price reacts at these levels 90% of the time, either halting or reversing. This gives you 2 superpowers. A reliable bias to use with a reversal strategy. A clear understanding of where not to blindly take trades. Trust me, these levels will save you a lot of fake breakouts and headaches. Segment 5. Final tips, keep it clean. Don't go marking every minor bounce or microstructure. You'll end up with a chart that looks like spaghetti. Stick to the major levels. Use zones, not lines. Use parallel channels for trend lines. Confirm multiple touches. Check 4H critical levels before entering intraday trades. That's how you keep it smart and simple. Alright, that's your crash course on support, resistance, and trend lines, with some spicy upgrades. If this video helped you clear out the clutter, smash that like button, drop your biggest takeaway in the comments, and subscribe for more videos that don't just repeat textbook theory, but actually give real tips that work. Catch you in the next one.